From retail straight down to institutional players, Ethereum's merge caught the eyes of many prospective investors across the board over the past few months. And the widely used blockchain is set to undergo a major upgrade next month that's gonna change everything. In fact, Citigroup said that Ether, which is the native crypto of Ethereum's network, will create a new yield-bearing crypto asset soon enough. So without further ado, let's jump into the video. Here's why Ethereum is gonna be bigger, better, and stronger. Finally, this is the summer of crypto. In fact, with the way things are in the crypto market, this might be a pretty good time to invest in some, especially if you believe that blockchains and cryptocurrency will be a thing. And frankly, who doesn't? Which is happening sooner than you think, and it's the next step in the Ethereum roadmap. Simply put, it's going to switch the blockchain from proof of work to proof of stake, using its cryptocurrency to secure all transactions instead of using ASIC mining machines. With that said, the upgrade is going to reduce the need for computer power, cut its energy consumption by almost 90%, and make the system much more secure. If anything, that's going to leave Bitcoin as the only major blockchain using the energy-intensive proof of work to update its blockchain finally. Now, the coin's proponents say that it's going to create a decentralized world computer that's going to let people transact easily without any intermediary involved and use smart contracts to perform tasks, which is going to make e-commerce much more efficient. And the new proof of stake system is going to allow anyone holding 32 or more Ether tokens to be chosen to select new blocks and easily update the network in return for some new Ether. Up next, Citi says the merge is going to make Ethereum a yield-bearing asset. Now, Citigroup is an American multinational investment bank and says that the transition from proof of work to a proof of stake consensus mechanism is going to make it the biggest software upgrade in the ecosystem. In fact, Citi's research report pointed out the merger is going to slash the overall Ether issuance by 4.2% yearly, which makes it deflationary, and that's exactly why shifting to a proof-of-stake consensus mechanism is going to enhance its quest to become a store of value finally. Adding to that, crypto service provider Lucky Hash also shared similar views, saying the merge is going to bring a 1% annual deflation rate. Having said that, market analyst Lark Davis also had a similar opinion, saying the proof-of-stake framework is going to trigger a supply growth rate of 2.8%. And by becoming a yield-bearing asset, Citi claims that Ethereum can expect more cash flows, which is going to bring about more valuation methods that never existed before. And if we're talking about the post-merger era, Citi expects the coin to be much more environmentally friendly and energy efficient. And the date for the merge? Well, in the middle of a recent developers call, September 19th was set as the expected date for it. Experts claim that the merge is going to be a game changer because it's going to shift the selling pressure you experience in the ETH coin network. Moving on, this is a new form of financial infrastructure. Lisa Wade, a former NAB executive and now the CEO of DigitalX, said that the merger is going to make it feasible for companies like theirs to start experimenting with nodes that earn from providing services to be able to provide a yield for their investors. It's clearly a new form of financial infrastructure, and it's pretty important that everyone understands how it works and contributes. In fact, if we really want blockchain to reach its full potential, we need some robust and cheap financial infrastructure to use for it. Just last week, DigitalX claimed it sold 3.35 of its Bitcoin to buy Ether. At the same time, they're still holding on to 212.68 Bitcoin. That's probably worth around $6.5 million, and that's a part of their $20 million portfolio of digital assets. So while they're making the shift to the second largest cryptocurrency, they're still playing it safe. Right now, DigitalX and Block are the only two ASX-listed companies that have direct exposure to Bitcoin. Now, Wade said DigitalX started looking for opportunities to participate in validating Ethereum right after she interviewed one of its co-founders, Joe Lubin, back at a Blockchain Australia event last year. In fact, he discussed the way this merge is going to reduce energy and called it the early days of a paradigm shift. Simply put, it's a step toward green financial infrastructure. Having said that, here's why there's a high conviction for it. Now, there's no doubt that it took some time for crypto markets to start recovering after a rocky first half of the year. And while the merge is going to cut down energy costs and whatnot, they're still not going to address the criticism they received around gas feed and scalability yet. But then again, the upgrade is definitely going to add to the coin's value for its token holders. Right now, there's no connection between what the holder owns and the revenue that the network is going to generate under the proof of work model. With that said, this will change in proof of stake, where holders will all of a sudden capture fees as well. Adding to that, experts say Ethereum has 100% 20% net income margins because the network basically has no expenses. But what's really important about the merge is the network's shift to an entirely new structural flow dynamic. Let's take a look at it from an investment standpoint. Hal Press, a senior analyst at Maverick Capital, said, "You're gonna see the entire crypto space through the lens of flow. In the end, what really moves prices is the flow of funds and not fundamentals. In fact, nothing really moves price other than the flow of funds, and especially when in crypto, fundamentals are much more opaque." Press added that his philosophy as an investor is to basically sit on your hands and pass on all the low to medium conviction ideas and start waiting for high conviction ideas. Up next, we can expect a reduced token issuance. Now, token issuance on proof of work blockchains is basically the cost of security, and miners give security to the chain by validating their transactions, to which they're rewarded with native tokens. And these tokens are a new issuance, which are then introduced to the circulating supply. All of that is basically inflation. Now, high token issuance is a very tricky business over the long term because it dilutes the current token holders and pushes the price of the token down over time. And with the new proof of work consensus mechanism on Ethereum, we don't need miners anymore. Holders staking these tokens are going to secure the network, and they're going to receive a reward for doing so. That reward's going to come from both newly issued such tokens and even the transaction fees. Now, let's talk about the selling pressure versus buying pressure. Because of the high costs of running a mining rig, miners are rewarded as soon as they sell their tokens, and they need to do that to cover their hardware and energy costs to make a profit from their efforts. According to Hal Press, miners sell roughly $18 million worth of it on the open market every single day, which creates $18 million of daily sell pressure on the Ethereum token. And even with the most basic economic principles, there needs to be at least $18 million in daily demand to buy the token if they want to keep the price stable. Now, after the merge, this daily pressure is going to be reduced by a lot, even moving closer to zero, as validators won't have any energy or hardware costs to cover. And what's more important is that staked tokens are locked up in the networks, so stakes won't be able to unlock them until the full Ethereum upgrade is complete, which could take anywhere from 6 to 18 months. Even when it's completed, stakers won't be able to unlock rewards immediately and will be placed in an unlock queue. And here's the downside of a high potential investment. With every other attempt at high return plays, there's always going to be a downside and risk. With that said, Press says that he's almost certain that the merge is definitely gonna go smoothly. And like anything, there are definitely some technical edge cases that create a chance that the merge might not work successfully. With that said, it could massively impact the confidence people have in Ethereum right now, and it could very well impact its token price. Adding to that, there are also other overcrowding risks as well, such as too many people in the trade on the day of the merge as well. Having said that, despite all the risks, the 28-year-old founder is still looking forward to a very successful outcome of this merge. He further said that if we're going to look at this from a technical risk standpoint, there's definitely a 5% risk of something going wrong the day of the merge. And if we're looking into that scenario, there's probably going to be a 40% decline in price. At the same time, Press feels that there's definitely a 95% chance of things going smoothly, and in that scenario, Ethereum is probably going to go up by 10%. So if we're weighing the possibilities, we can expect a pretty positive expected value. That's a wrap for this video. What are you expecting after the Ethereum merge? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.